the information I'm giving in this video is just for, financial education. I'm not a financial advisor. I'm not giving you financial advice. This is just to learn about covered calls, cash secured puts, so that you make your own decisions, you make your own trades, you lose your own money or gain your own money. Invest at your own risk. I'm not a financial advisor, and this is not to be construed as financial advice. All right, Lucid Nair here with a video on covered call trading. So I actually tweet about this in our private Lucid group on Twitter. Uh, some people had asked maybe I could explain how I choose the covered call trades that I do on stock ticker LCID for Lucid. So I thought about looking at the technical analysis chart here. That might give us a better idea of where we can find support and resistance levels for Lucid, which we can write cash secured puts or covered calls to generate some income against our current long position and maybe future long positions that we're trying to take in. So when we look at this chart here, we can see that Lucid's been kind of channeling between this like $35 range and like $45 range for the last month, almost 2 months so far since December into November. Around here, we had those SEC investigation calls, and that's kind of when the stock just dropped to this channel. But what we can see here is that $33 to $35 levels has been a pretty strong support, and it's something I've drawn here, 33.81 and 35.73. So on the put side, if you're trying to generate income from a cash secure put, these are levels that I would look at, and it is actually something that I've written down. So I've written the uh, four cash secure puts around the $35 level, trying to get 400 shares. Each contract, whether it's a cash secure put or covered call, represents 100 shares. So in a cash secure put scenario, you need to have, like in my case, 100 shares worth of capital that you could put to use. So if you're trying to write the $35 at cash secure puts, that you need $3,500 on standby to purchase those shares. And at the covered call level, we have some resistance around the $42 level to $45 level. And then there's not like a lot of resistance up until $51. So we haven't broken $45 in quite a while since December into November. So if you're looking to write covered calls, I would recommend, the first resistance point being around this $45, $46 level, because we usually go up, we bounce back, and we continue to channel. So covered calls are good in this kind of environment, especially with the Fed meetings next week. We're not really sure what they're going to say. They could bring the stock down below support. $33 could be extremely bullish. Maybe it blows up. My take right now is that around the $35, $45 level is where we can make some trades. So I'm still a long-term holder of Lucid, have a lot of shares, trying to, kind of become the Lucid Nair. $1 million in Lucid is the goal here. But it's going to take time. It's going to take years, I think, to reach there. And so in the meantime, why not make some income? That's my take on it. So if you're feeling like $45 is too aggressive, then the next level here we're looking at is like the $50, $51, and probably could do in between as well. My goal on covered calls here, so I'll actually pull up what my current positions are here right now. So I hold 1,500 shares of Lucid, and it's at $37.75. So those are just the trades that I choose to take on Lucid right now. I have the 1,500 shares long, and then I have 15 contracts at the $49 price target for a covered call. So these are 15 um, contracts, and I wrote those down for 65 cents a share. So at least that's one goal I think about is I want to hit at least at least 60, 70 cents. A dollar per share per contract is nice. Um, I'm trying to make, 2 to 3% on my position. Um, so if my position's at $56,000, I want to make at least $1,000 to $2,000 on the position if I can. So I write weekly covered calls. I also write biweekly covered calls, so 1 to 2 weeks out, and I choose those prices like we spoke about at the beginning that are representing for covered calls, I would look at the resistance levels in the chart. So right now, I mean, $49 looked pretty unreachable next week. And so far, we've been pretty right on that position, 73% in the green. And then on the cash secure put side, I want to take in shares. I'm saying that Lucid's not going to fall below 35. So I want to make the kind of reverse bet that Lucid is going to stay above $35, and I took in 450 bucks for that. So between the cash secured put and covered call, this is like $1,500 of income on like a $50,000 position. So um, that's a good way to hedge. You can use that money to buy more Lucid shares, which is usually what I do. I'm just kind of this technique is called the wheel. You can look that up. The wheel option strategy is where you generate income from covered calls or cash secured puts, and you use that money towards buying more shares, and then you kind of repeat the same process. So if we look here, I have 15 contracts. That's against 1,500 shares. So on the covered call side, this is the max number of covered calls I can write. Each contract generated me 65 cents. You have to multiply that by 100 shares. That's $65 per 100 shares. $65 times 15 is where you get this $980 or so. So I took in about $1,000 a week or two ago, betting that Lucid would stay below $49 by 128. So I use that $1,000. I buy another, 30, 40 shares of Lucid, and I just kind of keep doing this game until I don't know, I call it like a Lucid share printer. Um, and so far, Lucid's been pretty good to do this on because it the stock tends to pop pretty high, and then it gets shorted somehow near the end of the day. So that's usually when I'm looking to write a covered call. When I want to enter a position is when I see the stock kind of go up 5, 6%. That's when I'm looking to buy covered calls. And I usually don't buy all my covered calls. What I do is I buy like 1 or 2 contracts, and then I look at my position and I see, okay, maybe I'm falling down. A good example of that is this cash secured put. I'm down 4% in it. If I see this drop, my profit is dropping like 10, 15%. So when I buy another covered call or cash secured put, because I want a dollar cost average into the position. Um, and that tends to work pretty well for me. So that's just kind of what I've been doing. Um, yeah, so right now, this position I'm just letting it expire, I think, 100% in the green. So at we're not going to reach $49 that I can think of. Um, in this portfolio, my average cost for Lucid is around $37 a share or so. So when we write covered calls, yeah, you don't really want to go below $37 because you're going to lose your shares if the stock is below $37. Like if it goes $36 and it's going to get sold at $36, and then you're going to get, the difference loss in your portfolio. So I tend to write covered calls at a much higher pace. So if this is $37, I'm looking, in the $40, $45 range. I'm looking at least 10 to 20% above the current share price and to the point where I'm making 65 cents a share. And I want to see some stock action. I want to see the stock rip up a little bit, like right here, where we see it goes really green. This would be perfect spot to write covered calls. I'd be right here at $45, $46, writing maybe like the 47s or 48s. And then you can see here the next day it went red, and it kind of fell apart from there. So that is where your resistance level is. That's where I focus on the covered call side. On the support side, I'm looking at cash secured puts. Yeah, so if you have more questions about how covered calls work or cash secured puts, please leave them in the video in the comments below. And I'll do, follow-up videos if you want to learn more about how these trades work. And yeah, I think next week is going to be pretty volatile with the Fed giving the interest rate updates and the updates on the economy. I don't think we'll break 35 or 33. It's possible. If we do, I'm going to get my cash secured put filled right now, which is sitting at $33 or so, and $35. So the cash secured put here is sitting at $35. That means that if Lucid drops below $35 by 128, I will be assigned shares at $35 price target. I mean, if Lucid is $33 by Jan 28th, then I'm going to take about a $2 loss on the position. And for that, I made about $1.15 per share. So this implies that Lucid may drop to $34 according to the options volatility. I don't think that'll happen. $35 has been our support for quite a while, so I was willing to make $476 on the position, which I will just put into more Lucid shares, probably 10, 15 shares of Lucid there. Yeah, and I just do this kind of weekly, bi-weekly, keep generating income, and you'll see this share count just start to increase. That's my strategy. So I want to get to 1,500 shares, 1,600 shares, 1,700 shares. Long-term investor of Lucid, but in the meantime, my strategy is to use the current shares to generate income, use that income to boost the share count. Um, Yep, and that's all I have on this video. If you found this information useful, please give us a like and subscribe, and we'll keep creating content like this. Thanks.